Hi, my name is Shane Williams. I'm President and CEO of West Red Lake Gold Mines, and we're restarting the Madsen mine in Ontario, Canada.
You are, and I think that's the thing that people want to try and understand is the timing of that one, because obviously what's gone before, a few false starts by other groups. For you, you've got to deliver a very confident pitch as to why this is the right time, and you're just about to deliver PFS, so it's a little bit unconventional. So what's the thinking?
Yeah, look, this goes back to my actual prior history a little bit. I had success with a project that my people know called the Lamac project in Val d'Or, and with Eldorado Gold, and it was very successful. We turned that around and put it into production in about 18 months. And again, we did the same strategy. We did a pre-feasibility and went into production. And really, it's around understanding the project, the quality of the project, what data is available, what data is not available, and tailoring your strategy to that project. Early stage projects have very little data. So, you go through those phases: PEA, pre-feasibility study, feasibility study, and you're getting certainty on the data. You're confirming, you're doing estimates, you're getting quotations, you're getting real data. The difference with the Madsen project, as some of your viewers will know and listeners, all that data was there already. There's been a lot of $350 million worth of capital costs already spent on this project. So we don't really need to get a capital estimate for the process plant. We don't really need to get a capital estimate for our tailings dam. So, they are costs that are sunk in the project. So here's our capital costs. The pre-feasibility is about defining the project, running options, homing in on the main project. And then the feasibility is about certainty, then the next level of certainty on costs and schedules. And so because we have that level of certainty on a number of costs, we've gone ahead and went from pre-feasibility, and our plan is to use that as a benchmark to go forward.
Right, okay, but let's be clear, because what went before was not good. The pure gold, they kind of failed underground, they kind of failed above ground. There was a lot went wrong there, and they spent a lot of money in there, and there's a lot of sunk cost. Some of it you'll be able to capture the value from. You're talking about the plant itself, the tailings, etc. With regards to the stuff that you feel that you don't need to focus on this time, can we just be really clear as to why you don't need to focus on those things and why you're focusing on the things that you are in this PFS, and that's going to be good enough?
No, it's a tailored approach, as you said. So I'll give you an example. Metallurgy process plant, right? It was constructed. It was $150 million of constructed plant. That plant operated at 1,000 tons a day. It's designed for 500. It operated at 1,000 tons a day. It had excellent recovery over that period. It had good throughput. There was no mechanical issues. So that is standalone, ready to go effectively. So, they're the big elements. We look at the water treatment plant. Again, operated very efficiently, was built, put in place, discharge permits in place. All that QA/QC has been approved by the regulatory agencies. If I look at tailings dam, the tailings dam was built, put in place, and completely full. We've just done another expansion to that. So again, that's another block that's behind us. We bought a crusher. That's bought. It's fixed cost. It's arriving on site. So these are all elements that, not saying we don't have to worry about, but they're less important than areas. We kind of looked at the failures from the last time, and we focused our effort on those failures and less effort on other stuff that's already in place. And that was a tailored approach I talked about.
Right, okay. And then so let's look at what the PFS does cover. And clearly the economics underlines everything, but let's look at the moving parts there, which kind of make up and contribute towards that economics, if you don't mind.
Yeah, obviously I talked about the capex and opex of the economics. Okay, so when we talk about capex, as I said, a lot of the capex, 80% of the capex is defined already. Some cost, there's some go forward capex. So that's capex kind of there. The other important part obviously is opex. So the opex associated. Now, in a lot of our early stage studies, with some engineers doing some benchmarking studies, it's, high level estimations, etc. I'm not sure people understand, but we've been operating now for over 15 months, and I'm doing underground development, underground drilling. You know, we have 100 people on site. So we have a very good handle on our costs for drilling, blasting, fuel, people. You know, way more actually, way more certain than actually a pre-feas or any feasibility out there, because we're actually doing the work. So, you know, that's at operations level. So we have all that data for costs and OPEX and CAPEX. Now, the focus of the pre-feasibility will be where the issues went wrong, and that was that the resource and the underground mining. And that's the focus of the pre-feasibility study. Those two key areas are areas we want to de-risk and get right.
Right. Okay. So obviously the board is kind of all-star board because they recognise they could pick something up for cheap here, but they also recognise you can't afford to get this wrong. It's going to be right first time. So what are the you've told us about a lot of the things you focused on, but what are the things that they have put pressure on you to kind of focus on and make sure that you get right to be able to kind of deliver this thing, you know, faultlessly?
Yeah, well, as you know, we have a bit of an all-star board, and people who understand, again, going back to our strategy, the mining and the resource were the key areas. So we wanted to build a very technically strong board who understood that, who could focus. And, you know, Tony McCooch has run big mines, actually knows Red Lake, worked early in his career in the Red Lake mines, so knows the challenges of underground mining in Red Lake. You know, Duncan Middlemass of West Dome. So they focused on us on getting the resource right, defining the resource, getting its certainty, and then moving that forward into mine design and developing the right mining style for this ore body. And if some of you remember, Tony McCooch in early days of Pure Gold was an advisor, and he wanted them to define a certain path forward, and he stepped away when that wasn't being done. So he knows exactly what needed to be done to make that successful. So coming in, obviously given the challenges of the last time, Tony and myself had a conversation. We kind of defined together a path forward, and he was comfortable coming on board. So that's the level. And, you know, he rings me up. He's been at site numerous times to give an overview of that. So that's a very important part of the story.
Right. And what's the timing on all of this one? Obviously, you know, you've got the PFS being worked on at the moment. And we've talked in the past about, you know, looking and defining the sort of the drilling required to give you the data that you needed to kind of, you know, fill in the blanks, as it were, for the final engineering, for the detailed mine plan, etc. So, what's left to do? Is it going to cost you any money? Because I know you just raised some money, and you know, what's it going to mean in terms of timing, delivery?
Yeah. Like, again, most of our work in the early stages on that drilling. We have a very good drill inventory in place today. We have over 100,000 ounces of drill inventory ready to go. So in the pre-feasibility, we will come out with a reserve, which is life of mine reserve of the project with all the design around it. But in that early stage restart numbers, that will be, you know, over nearly 2 years of run rate of design in place to do the mining. Development is another area that the Madsen mine has had over 14,000 meters of underground development. That will tell you the amount of development. Some companies struggle with the amount of development they need ahead of themselves, but Madsen has had 14,000 meters of underground development from 2018 all the way through, and we've added to that this year. We've done over 3,000 meters, you know. So that's one area that's now in place where we've done all our metallurgical test work. That's all been done, it's certain. The mine design is one area that's done now as part of the pre-feasibility. We're now putting it all together. We have the CAPEX numbers, the OPEX, the underground development office. So we're just in the final stages of reviewing those, putting them all together, putting a financial model together, and the plan would be towards the back end of November, sort of do a release on that.
It's kind of interesting, actually. Obviously, you're talking there about already having the numbers and assessing those numbers and validating those numbers. So you're not making the decision lightly about going off the back of a PFS, not just because of the history of you having done that before, but you know all the economics right now. The PFS is going to come out and obviously signal that to the market. So this is not a decision being made lightly, is it?
No, no, and all along the way, and just given the history, we've had independent reviews along that pre-feasibility study. So, one of the with the amount of focus on us and the amount of eyes on us, we wanted to be sure that every element, not only there was SRK were doing this study, but independently we were getting other views. So we've had a number of groups come in as the drilling and the resource model. We've had a number of independent groups come in and review that just to make sure, again, that we're there. And that's been totally independent, taking all the data, rebuilding the models, and they're being very, very consistent in the numbers. So the mining is the same. We've had another 2 groups come in and look at the mining of different ways as their optimization. So all along the way, we've had kind of different groups as we go. So it's a very, very, in a sense, it's been looked at by a lot of eyes to make sure that we're there.
Right, okay. Your message to your team is what? Because at the end of the day, you're the guy that's going to cop this in the neck if it goes wrong, right? As well as shareholders. But your message to your team is what?
Going forward or up to now, or a bit of
Well,
both?
give us both if you can. I mean, there's been a lot of moving parts.
So up to now, it was really there's 2 phases. Up to now has been really on the de-risking phase. There's a first phase, learning from the lessons, de-risking this project as we go forward. And that was where we focused on the drilling, the mine design, the different reviews. On a go-forward basis, it switches about delivery now, execution, delivery on that pre-feasibility. I believe we'll have a very confident, robust pre-feasibility that has a lot of de-risking and a lot of work. From here on, it's about delivery and execution. And that's, as your viewers will know, there was some challenges with the last group with that. And so that's important as we put the right teams in place, we structure it right, we get the right people on the ground, the equipment, the tools, to do that. And that's the focus. I'm actually at site now, Matthew.
Yeah. So what are you there for? What are you doing there?
So at the moment I'm here, and it's actually getting cold up here, Matthew. It's getting 0 degrees, so it's beginning, Red Lake winter is coming. But my main focus is to assess the readiness as we move forward. We've kind of been doing operational readiness as we go, as part of in parallel, really. We've hired mill manager, we've hired a good underground team, we've brought in different areas, and as I'm doing the pre-feasibility in a parallel, we're assessing how that operational readiness is going and where we see gaps and where we need to add support. So that's I've been doing that on an ongoing basis. So as your viewers will know, we've raised the money effectively, which was another de-risking event. We'll have our pre-feasibility, which is our de-risking event. We're now starting this test mining program, which is come up also to look at, and they're going to come together as we make that decision to move forward. So that's what I'm up here doing, just checking areas, reassessing, understand where we are, what needs to be done, then go forward.
Right, and so we should just talk about the money. We've referenced it a couple of times. You raised $29 million, bought deal. Where did that come from? Existing shareholders?
So a lot of it was actually existing shareholders, but quite a bit of it was from new shareholders who came in.
Good.
I think as we've talked a few times, there's a bit of an overhang on this asset, as you're well aware, and so it's been tough to get in new. Early days, it was tough to get in new shareholders. They weren't convinced of the story, as you probably hear from people. But I think the de-risking process we've gone through and that understanding and that we are beginning to get more and more people back interested in the story because they can see what we're doing, they can see the de-risking, and we have been very lucky in this race to get in a lot of new shareholders who came into the project. So that's been encouraging.
Yeah, okay. Well, I think that's probably a wise thing to have done.
I would just also add, man, since we took over the project, it's been $150 million we've raised. So there is support there in very poor equity markets. It's a lot of money that we've convinced shareholders that we're the right team to do this, that have come in on board.
Right. Okay. And just I want to be also clear about the process for this restart. Okay, the PFS will come out and it will say to the market, here's the economics around this thing. We think it's good and it stands up to scrutiny. However, you've then got to go do it, right? So you talked about some of the things that need doing up until now, but it won't be a case of off we go, down some of these declines and into these shafts. The underground development, there's work to be done. The pre-commissioning for the mill, there's work to be done. The test mining, quite frankly, that'll be the kind of real kind of proof point. There's things to be done here. So the teams that are delivering those things are on site now, is what I'm hearing from you.
Yeah, the team recently, as you know, we announced that we hired a mill manager. So he's already started to pre-commission early days. The mill was kept in very good condition, but it's been a year and a half. So he's going back in, looking at valves, looking at motors, looking at that. Do we need to do anything else? What else we need to do? So that's one area. The teams, there's 120 people on site now and 60 miners on the ground working on a constant shift. So they're ramping up. I don't know, it's an important part. We talked about this before. A lot of projects suffer because there's a projects team that come in and do a project, and then there's an operations team that take over at some stage. And sometimes the two never meet together, and it's a different skill set between project development and operational readiness. And the transition between those two groups is very important. And it normally takes quite a while. There's been a lot of projects where they're slow to ramp up, they take some time. And what we've tried to do is step back since we took over and kind of do ongoing operational readiness. Like, we don't have an EPCM, we don't have a big engineering company here. We're doing it in-house. Practically because we don't have a lot of capex to build, but a lot of it is getting those people in, getting our cost control systems in place, getting our admin systems, getting our mechanical systems, getting maintenance set up. So that takes time, and we have been doing that in parallel to these studies, so that hopefully when it's all done, we will come together, have those teams at the level that need to take over as we go into production.
Right. Okay. Well, look, I guess the proof's going to be in the pudding here. The PFS. When do you expect that to be announced to market?
Before the end of the month, in November.
Okay, so pretty darn soon.
Yeah,
well, maybe if you got time to come back on and talk about that, I'd appreciate that, because I think those numbers are going to inform the market as to what margin of error you've made for yourself. In a high price gold environment like this, near stab at $2,800 gold, it's. People have got, I guess, going to have great expectations of you. So I appreciate time today.
I would just add there, Matthew. Our focus is to be under promise and over deliver in reality. We've done the work, we've been conservative, we focused on Madsen. Our plan is not to come out there and show a big grandiose plan of a huge production. We need to be obviously positive project, good economics, but it's more, this is a starter, we're learning, we're doing it right, and that's what I want to make sure. But it'll be a robust project, but it won't be, the other was going to 2,000 tons a day and ramping up, and that it's going to be a good project, but conservatism, as we've done today.
Right, and I know we haven't talked about that ramp up or the drilling that you're doing. We saw some nice high grade results coming out as well. Perhaps we'll save that for when the PFS comes out and have a fuller conversation around that kind of that modelling and drill plan as well.
Good.
Shane, good to see you.
Thank you.
See you soon.